Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. Before we begin our video, you want to start off with our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. Any strategies we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. So this is our stock market technical analysis trading plan. In our video, we'll look at the past week's economic calendar and also look forward to next week. We'll see what happened as far as the most recent price action to identify key support and resistance price levels. We're going to look at the charts of the market leaders, Apple, Google, Goldman-Sachs, Priceline. We'll take a look at those. We'll look at the dollar, gold, and crude oil charts to see if there's any leading sentiment. And finally, we'll have an education spotlight at the end. So we're going to do things a little bit different this week. We're going to jump right in here to the non-farm payroll numbers. Yes, they released Friday, and we know the market was closed. But I think this is really going to be something that we're going to have to watch going into next week. So I'm really kind of focusing here. So when we think about what people are expecting, you have to think about what's happened here in 2012. You can see up here in February we had 227,000. January we had 223,000. I'm sorry, I said that backwards. January was 227, January was 284,000, and in December it was 223,000. So there's this 200,000 bar that has been set for the market. And of course, we know that the unemployment rate has gone down each time also. And yes, politically correct. We know that a lot of that is people not looking at all anymore than it is people actually being employed. And I'll scroll here. You can see here is that unemployment rate. Scrolling down just a little bit here, and of course, the chart that nobody, certain segments of the population doesn't want to admit, and that is there's where he became president, and there's our jobs number. As you guys know, I keep politics out of it, so I will continue to do so. So as we get into what actually happened, and we see the consensus was, somewhere in the 200,000, and the actual number was $120,000. And so now you see why I'm really kind of focused in here on this number. Yes, unemployment did fall from 8.3 down to 8.2, but the big thing here is going to be this miss. Consensus of around 200,000, and we came in at 120,000. Why is that important? Well, let's go to the charts and take a look. Okay, so we got up a futures chart, the ES, for Friday. Yes, the market was closed. One thing to notice is if you, as a great trading advice, you know how important I think it is to identify support and resistance. So if you would have saw this resistance around 1392 and would have had a breakout trade, you would have done really well. That's a side note. What's important is, all right, so here's 4 o'clock, 6 o'clock. What time does non-farm payroll come out? 8:30. There's 8 o'clock, 8 o'clock. Oh, look at this big red candle here. 8:30. So we went from 1392 to all the way down to 1372 at one point in time. So that is a 20-point drop there. Now again, market was closed. All the market participants were not there. But it does give you a small gauge into the interpretation of the miss. Consensus 200,000. The market came in at 120,000. How did the market think about that? Anybody that was around, the computers that were around, we've got a 20-point drop. So given those who were around on Friday didn't interpret that news too well, let's look at the week as a whole. So we're looking at the daily chart of the S&P 500, and we can see that overall, Monday, Tuesday, Wednesday, Thursday, the market pulled back this week. Wednesday was the ADP numbers, and we got an inclination that the employment situation numbers were going to be bad. But keep in mind, there's not always a direct correlation between ADP and employment situation. In addition, we saw the FOMC minutes, which basically said there was going to be no quantitative easing or anything like that. So Tuesday, Wednesday were not that great for the week. But what we can see here is a greater story of about a almost 3 week period here where the market has tried to get up here to 1428. It's tried to make new highs, and we did make a new high here on Monday. But overall, we've been in this real tight range between 1390-ish and the 1420-ish. And we're just going sideways. And anybody that's been with me knows what's my question? Catalyst. What's going to be our catalyst to move our markets into a new range? We have been in this range for quite a long time. Where we're going to go? Now, keep in mind, we're up 25% or so from the October lows. This has been the best quarter, I believe, since 2008. First quarter, we talked about that last week. So we certainly have reasons to be positive. And we can see, looking at our indicators, we've been in an overbought range for a long time. So a pullback is healthy. I don't want anybody to start panicking because we're pulling back. But it's also important to know what's going to be our catalyst. So our indicators are all finally coming out of our overbought range here on the daily. Come over here on the weekly. Zoom in a little bit here. We get a better examination of that red candle, but we also start to see these 3 doji candles side by side. Again, that's indecision. That's the market looking for a catalyst, looking for something. And we're just now starting to come out of overbought here on the weekly range. And we'll go out one more time to the monthly. And of course, the April candle is going to be red because it's only been a couple days here. But you can get an example of how great the first 3 months, the first quarter of 2012 was. And here we are, again, starting off with a little indecision. Now, we'll pull back here, switch over to the NASDAQ. We know about the tech stocks leading us along. Zoom in a little bit. And here, you can still see the same thing of sideways price action, but maybe a little bit more move to the downside here. As you can see, we're all the way down to the 20 moving average, which at our last chance held up a support. So it'll be interesting to see if we come all the way back down to 3,000. And also, if we get down to 3,000, we'll be testing the 50 moving average. Indicators are coming out of the overbought range. We'll go out to the weekly. Zoom in for you. And we can see almost, is this a morning star or an evening star? I think it's an evening star when it's up at the top. But you can see there's that doji pattern, again, kind of implying that we may get a little pullback here. Overbought on our weekly indicators. And finally, coming to our monthly candle, we will see that, again, great quarter for the NASDAQ stocks and our little doji here in our first week here of April. So because we're doing a little bit differently, let's talk about, again, I'm talking about catalysts and what can move us. Let's go ahead and pull up our calendar for next week and see if we have any catalysts. So again, as traders, we have to be aware that the market is consolidating, and we have to be looking for catalysts. And I want to qualify here or clarify that I'm not looking for an up or a down. We're just looking for a catalyst. What's going to move the market one way or the other? Our job as traders are not to hope and to vote or to root for a direction. Our job as traders is to trade the sentiment, to trade the direction. So when I look at this week, one thing that we may see is that we have our earnings starting this week. Our next round of earnings start on Tuesday after the close with Alcoa. JP Morgan reports at the end of the week. So it's not a lot this week, but we have the beginning. And with our week jobs number, if we come out the box with some weak earnings, that certainly can affect the market, especially as we're at these new highs. As far as our economic calendar, the only real thing we have here is on Friday we have consumer sentiment, and that certainly can move the market. Let's go ahead and pull up our market leaders and see what they're showing us as they head into their earnings. All right, so let's take a look here at Apple. The good news about Apple, and what's not good about Apple, is that we can see Apple, contrary to the market, is closing at all-time highs, 634. And our sideways price action eventually resolved itself up to upside. We can see our point of control right now is at 614, 615. So Apple, look at all this green. Apple definitely bullish. Look at the 10 moving average also acting as support. So Apple definitely bullish. Amazon finally revived itself and joined the market, but now it's pulled back a little hard. You can say hard. Found support at 197 at our resistance line. Broke through that. Maybe the 50s holding up a support. Point of control at 201. Sideways is the best I can say for Amazon. I wouldn't be trading it right now anyway. Next is Google. Google has been in a very big range. We can see basically from the 200 moving average down here to 560, all the way up to our highs, and our real heart of that consolidation has been this 580 up to 620. We got above that here in March, and now we're pulling back just a little bit. So I would say sideways right now. Look at our point of control here at 645 to get back up above it. I guess this is a good point to notice that Apple is above Google, maybe for the first time, the price, and who knows how long. Goldman Sachs, we know that finance can move the market, and as the market was moving up, so did finance. And then here we come, and we're sitting back here at the 50 moving average and our support around 118. So we'll see if this holds up. So we have our point of control above us. And we got a new range here now that we could start looking at 118 up to about 128. Overall, we want to see what's going to happen here at this 117.80, this 118. Will this hold up as support, or are we going to break back down into this range? IBM. IBM has been taking off, but it paused a little bit here this week. It did make a new high, but then it dropped off here on Wednesday and Thursday. But definitely I would say sideways to up. Intel's pretty much the same. Maybe a little bit more of a pullback here. Last week made a new high. It's kind of going sideways now. So sideways up here on Intel. MasterCard joining Apple, making new highs. And closing at the high. So up here on MasterCard. What about Netflix? Netflix, like Amazon, had found its support and was moving, but now it's back into a range here. We can start to see that this gap here, here's the gap, but here's the swing high. This 105 seems to be holding up as support. And so definitely sideways on Netflix. And finally, Priceline, closing at the highs with Apple and MasterCard. Look at that 10 moving average holding up as support. Definitely something to watch. Priceline bullish. Now let's take a look at some of our market sentiment leaders. Here we're looking at the dollar and weak market, and we can see our dollar starting to strengthen. And remember, the FOMC said we're probably not going to be doing any more quantitative easing. That's good for the dollar, and we can see that we did hold up. Last week, talked about would this 79 hold up as support, and in fact, it did. We're coming back up. Will we break this past swing high? That remains to be seen. Point of control just above 79. So dollars range bound between 79 and 81, but we'll see what happens. So if the dollar is getting a little bit better, what does that mean to gold? Gold pulling back a little bit here. Almost coming back down here to 1600. We broke through to 1660. We're trying to hold up here at that 1600 price level. You know, one thing that's interesting is that, you know, we don't really see those commercials anymore about, you know, buying gold. You don't see them as much, although maybe I'm just not watching the right channels. Partly because some of those companies have been investigated for false advertising. But, you know, gold has definitely not been the beast. I mean, certainly it's at a high price, but it's not been the bullish beast that it was in 2011. And finally, we'll go to crude oil for our pocketbooks and oil. And we, you know, Lon spoke about this 96 to 102 We finally broke out of that here in 2012, and now we're coming back, and the 102, what was once resistance, is now holding up as support. So as we come to our education spotlight, we basically have come to the end of our almost year-long discussion about trading plans, how to make them, what's going to be included upon them. Of course, we're going to continue to talk about trading plans. Of course, we're going to continue to talk about the psychology of trading. But the plan that I was following as a part of the presentation is over. So now we'll probably choose a new book. I'm looking at a couple of books to start sharing. We've already done Trading in the Zone. We've done Trade Your Way to Financial Freedom. So I'm looking at another book to share with you guys that will be beneficial. But in the end, and I was sharing with the client today, I was working with someone on Thursday, Tuesday and Thursday, and we're getting together next week. And, I was saying if it was as simple as understanding the trend, understanding support and resistance, and having some fancy dancy indicator to get into a trade, everybody would be rich. But we all know it's not that simple, because if it was just intellectual skills, technical skills of reading a chart, again, we'd all be rich. But what's different is that inner struggle of self-understanding, of controlling our emotions, not trying to jump in early, not trying to ignore our criteria. It has to be A, B, C. If yes, 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 then I'll trade. Not 2 out of 3, not 1 out of 3, not 2.5 out of 3. All 3 have to be aligned, or 4, or whatever your number is, whatever your criteria is. If they're all aligned, take the trade. Otherwise, don't. And there's too many of us along the days, and I was there once, and we've all been there, where we're trying to jump into trades, trying to anticipate. And again, I know that's sort of a double talk, because we're saying that there is a place in the market for a feel and intuition, but that's really after years of trading where you really get the heartbeat of a stock or a forex pair or futures or whatever. But in the end, you still don't ignore trend, support, and resistance, and your criteria. So mastering that battle, and that's where coaching comes in. People spend so much time on Google looking for indicators, and it's not an indicator that you need. It's a sound foundation. A trader's mindset is what you need. So hopefully you will comment, like, subscribe our video. Tell me what you think about psychology of trading. Tell me what you think about the emotion of trading, the fear-based trading. And we do have some videos on that for you. And as we just said, the difference is not an indicator, it's a mindset. And so, if you take a look at our mentorship program where we work with you, I was just talking to you about a client I'm working with now. I have a couple of clients I'm working with. And of course, if you don't believe you can do it yourself, we do have some managed Forex account, full transparency, leading brokers, fully regulated, your trading accounts, and we individualize our trading plans just for you. We actually have a webinar that we're going to be putting together for you guys shortly about that. And finally, for our stock traders out there, we do have a system for you, the stock trading nitty-gritty. It reveals the number of reasons why most people are losing money, as we were just talking about, and it gives you a simple trading technique to help you lock in your profits. Those are our resources for you, but again, the key is an effective trader's mindset where you have criteria, and more importantly, you have the mental stability, the psychological capital to pull your trigger on in each and every trade. Thanks, guys, and I'll see you next time.